Hi guys, and welcome back to another weekly watch list for me, Connor. So, of course, to start off with, I just wanted to say I hope everyone is well, and with everything going on in the world with this recent pandemic of COVID-19. I think it's really important to start off the video in the right manner, and of course addressing that it's a really tough time for everyone. We've had certain people within the trading community that I'm within, who've lost friends and family, and of course different people around the world have been affected by this. I think it's really important to start off with the please stay safe, stay home, unless it's very necessary. Of course, key workers like for my mum and my stepdad, they're both in the NHS, so of course they have to go to work. But for other people, they need to be ensured that they are only going out for the right reasons and the necessities. And of course, if they're looking after sort of the elderly or people in care, then of course that's important too. But anyway, let's get back to the video, and hopefully everyone enjoys the content I'm going to go through. So let's start off with USD/JPY. This is another one of my most recent trades, but also another one of my best trades. So in the last few weeks, I found that my trading has reached another level, and now I'm putting out some trades like this every single week. Now, of course, oil, we had sort of 4-figure pips on that one. Of course, it's like 3,000 trading week, 3,000 pip trading week that week. Obviously, USD/JPY was also featured in that video too. So obviously, what we had here was we had a simple case of structure, so higher highs, higher lows, higher highs, higher lows. This obviously creates an uptrend. So what we had was we had this new higher high formed in this liquidity area. In this case, a supply zone, because of course if supply increases, then this pushes price down. So then once price reverse from here, I was looking for sort of long opportunities. We got this 61.8 in line with the fib, in line with another liquidity zone, but in this case a demand zone where the demand's coming in, and of course that pushes price up. So I end up getting a really nice entry of 105.212, and due to sort of the nature of it was on the trend line, it was on the fib, I had a sort of small stop loss of 20 pips. So of course this was around 104.941. So of course, with this being a high risk reward trade, I wanted to make sure to manage it appropriately. And of course, with a tight stop of 20 pips, I was looking to move this to break even as quick as possible. So my risk to reward, of course, being higher, my stop loss was, sorry, it's 941 here, but we'll correct this. It was actually around sort of 912, so about 30 pip stop, just to keep sort of some security there. So then what happened was it come into my region of the sort of fib, and I saw a nice sort of rejection on sort of, it was around the sort of 15 minute, and I got in on the entry, and then of course you can see from there just impulsively broke, and I did get a couple of scalings on this, but I thought I wouldn't mess the chart up too much, and frustratingly it did actually come close to my minus 61.8% target. However, you can see here it did sort of end up coming sort of around 20 pips short, but of course it was still sort of a 570 pip trade, which is obviously great. But the important part here is as I go on to in the video, you'll see that considering I was sort of in this for such a while long, I then took it short, and I'll explain that when I break down USD/JPY. So now let's move over to the DXY. This is of course our dollar index, and of course, as we know and as we say every week, this is how we monitor the movement of the dollar. So now what we're going to do is we're just going to look here, and if we just the DXY, or our dollar index. So this tells us the strength of the dollar against the major basket of currencies, where the euro, of course, is the highest represented in that basket of currencies. So here you can see just a simple case of trend line with higher highs and higher lows being formed. Then we had this new high created up here, and price has yet to sort of come above that. So of course, on the monthly, the reason why I'm looking at the monthly time frame is I always look at the higher time frames, which is really important, and some of the guys I've been doing private one-to-one mentoring with have noticed this, is that of course, it's the 29th of March on this current day of Sunday, and of course, we're anticipating that the Sunday after this week, we're obviously going to have the Monday close. So, of course, why are we looking at the monthly? So, the reason why we're looking at the monthly is, of course, we do look at every video, but there's more sort of significance this time. The reason is because, of course, it is the 29th of March, and that means that during the next few days we're going to have the close of the month, right? So therefore we can look at the month and sort of give us a direction of where we might be going in the future week, or in the next sort of few weeks, or of course the next month. So obviously looking at the monthly, of course we can see here we have got a monthly sort of currently a spinning top, showing indecision to both sides, and of course we've got a reversal which touched the trend line at sort of 94.62 price, and of course the high being the 103 level, which created a new current major high, but however didn't beat the previous major high. So we just jump down to the weekly, and on the weekly what we'll see, and we can see, so what we have here is if we just place a fib from the high to the low, So this is the high, sorry, the low to the high, because we're looking at sort of a downtrend in this example. We've got the sort of 0 at the top, the 100 at the bottom. So we can see here we've got a number of fib levels we may be looking at. So the first one we're going to look at on this example is the 61.8. However, there is another two we're going to look at as well. So what I'm going to do is I'm just going to move this text out of the way. But as you can see, it reads, price could not maintain momentum above liquidity, which is this band here. The tweezer top formation was formed, and therefore after following that we had a bearish engulfing, which is of course a tweezer top we expect, that's where it come from. So could this just be a retracement from this sort of impulse to the upside, or could we be seeing a reversal? So the reason why I've marked out specifically the weekly 50 MA and the 61.8 fib is because this is our area of confidence, right? So this has been our 61.8 here. However, of course, because it is so impulsive, we are going to consider some other fib areas as well. So we're going to look at the 71% and the 78.6%, but focus on the weekly. We're just going to focus on 61 because you can see this is where price is, and of course, if we break the weekly 50 MA, then that's going to be a big move to the downside. So now what we do is we're just going to flick onto the daily, and on the daily you can see we've got a number of fib regions here. So looking at the daily, what we can see is we've got sort of the 61.8 here, the 71 and the 78.6. So what we're looking for is one of these areas for price to interact with. Of course, on here you can see that the daily fib has been broken. However, of course, the weekly 50 MA as you saw before isn't too far below. So our focus is still the 61.8, but now we're looking at sort of 71 and 78.6, and sort of looking for areas of confidence where we've got other confidences to go with our trade. So we haven't really got much to look at here, if I'm honest, because of course on the daily you can see we've got the daily fib being broken and the fib areas. So let's just jump down to the weekly and see if we've got any clearer idea. Well, looking at the 4 hour, we can see that we've got a smaller sort of time frame example of an uptrend. So we've got the higher highs and higher lows as we started with in the monthly. So now what we're going to see is we've seen this consolidation zone here. So with a consolidation, we normally expect to break up to the upside and then a retest and then a break to the upside. All we get is a break below, a retest, and a break to the downside. So now you can see we broke below that, and now we've obviously made an impulsive move to the downside, and you can see that there is an area where we can place our fib. So of course, if we go from the swing high to the swing low, what we can do is we can just place this fib here, and then what we can do is we can just look at what fib is looking to interact with it. So what we can do is we're just going to look. So I'm going to guess for the 23.6. How's the 23.6 look? Perfect. So this is important, the fibs, if you get them right. It's got a perfect example here of a 23.6% rejection. The 4 hour 50 MA is just above, and then we've seen an even star formation with a sort of small bullish candle and then a spinning top or doji, and then a bearish engulfing. Of course, spinning tops and dojis are different. It's based on the position of the body, but here you can see there is a spinning top, but also very similar to a doji because the open was nearly equal to the low. So now we're anticipating that because it's a 23.6 rejection, we're looking for price to continue to the downside. So this is looking for minus 27% and then potentially the minus 61.8, which would go with our idea of the 61.8 because of course we have got room to run before we look for that reverse to the upside. And of course we're looking for a slowdown in momentum, meaning we're looking for spinning tops, dojis, or a morning star or a bullish engulfing, something to say that there's a reversal in place. So that's what I'm looking at on the DXY. I'm looking for sort of a continuation of the downside momentum into then potentially a massive upside move. And that's the DXY. So of course next we're going to move to another one of our main currencies we start with, which is gold. So looking on the monthly, what we can see is obviously for the last sort of few months we've been above this EMA. So now we're going to look at the monthly time frame. So what we're looking at here is a downtrend formed on gold, and then we've looked at a break and then a retest of the 1191.417 support that I've marked out here, and then a 61.8% fib. So I kept that on just to show that we did reach that minus 61.8, and it was mentioned in a few videos ago. So of course what we're looking at here is the fact we have done this now, so we expect some sort of correction, which we did see. We saw a correction to the previous sort of target zone. And of course if we moved our fibs, then we would have saw this go potentially into another extension zone. So of course what we said last month was a monthly spinning top doesn't signify a reversal or a retest high broken. That was mentioned in one of my videos. So of course that was the February close. Now we're coming up to the March close, and price has tested the previous high, which is broken in terms of this previous high here, and of course now is impulsively broke to the upside. So now let's just flick onto the weekly. So the weekly, you can see we've got an uptrend with our lows, higher, 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 low, higher, 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 low, higher, higher, and now we're currently forming a higher low on the 50 MA on the 50% fib. So now we're expecting obviously an impulse to the upside, which we've had. So the question is, do we now extend and go to sort of the 1824, which is our minus 27%, or we can see a rollover to the downside? Well, as I predicted last week, we saw the upside momentum, and I expect this to continue. We had a bullish engulfing, so therefore I'm expecting a major high to come in the next few weeks. So that's the weekly. Now let's flip onto the daily. Onto the daily, if we just clean up a little bit, you can see we've got a few areas of liquidity, and of course now we're just seeing that 23.6% sitting at 1600. We've rejected that already, right? Because we've made that new high, and if we just adjust this fib slightly, you can see we did sort of come down. We didn't quite touch 23.6, but we did retest that significant 1600 zone or level. So what we're looking for now is maybe another retest, potentially to retracement if we was to get in this trade, or just to go even further to the upside, so potentially upside minus 27, in this case equal a new high, or the minus 61.8 being the 1763. And of course this is the daily fibs, this is why the fib extensions are slightly different. So obviously we do have a tweezer bottom formation down here, a tweezer bottom formation here, and of course we're looking for price to continue that impulse. So because we've got that tweezer bottom formation on the 23.6, on the 1600, I'm expecting further upside momentum. So if we just go into the 4 hour, we can see that we did have this sort of wedge formation, and what we saw was a price breakout to the upside. So it broke out very impulsively, as we would expect after wedge formation. Then we got that retest, and now obviously we're just making that higher. Of course, it's not really much of a high, but it's still a high. So price obviously broke the 4 hour 50 EMA very, very impulsively. We didn't get a retest, so maybe we're going to retest that, and that's where the 38.2% fib comes in, because it goes nicely with that. However, if we add in the 23.6, what we find is that price is of course within that liquidity. 23.6 is within that liquidity zone, and of course the 4 hour 50 EMA could come up a little bit higher. But also, price did retest at 1600 level. So let's look at the 1 hour 50 EMA for some more confidence. So when it retested that 1600 zone, it sort of tested that 1 hour 50 EMA as well, and it looked to push to the upside. So for me, I think gold is going to be bullish, and I think we're going to see a continuation to the upside. Now let's look at oil, which of course we know in the last few weeks I've had some luck on it. Or not really luck, because of course it's my analysis, so therefore I've analysed it pretty well in another sense. So looking at this, what we've had is a really impulsive month. We've gone from $49 a barrel down to $20. That's a massive $29 decrease. So price hasn't closed below the monthly trend line. However, I expect either one of two things: a huge bullish week in terms of the fact that we'll push back above this 33 level, which I highly doubt, because that would be sort of 1,200 pip moves to the upside, or what we get is a slight retracement and then down to create a new weekly low. So now let's go on to the weekly. We can see obviously this was the weekly low before at 19.99, and obviously we've got an indecisive candle here inside that week, and we continued and closed below the candlestick body of the previous week, therefore bearish candle. So now we've done that, obviously price closed inside that week. The question is price running out of steam? Are we going to see some retracement, or are we going to see a continuation to the downside? Well, let's go into the lower time frames, such as the daily, to have a look at this. So on the daily, we can see the 50 EMA sitting quite high above price. Price is within two liquidity areas, between them the last major low and the new major low. And price has formed a nice reversal curve. What I mean by this is, rather than having, say, an impulse to the upside and an impulse to the downside, we've had a nice smooth reversal showing that slowdown in price, that deceleration, that double doji candlestick pattern, or double spin top in this case. And that shows us that price is decelerating, and it's going to move and roll over to the downside. So that's what I'm anticipating here. So now when we go into the lower time frame, such as 4 hour, we're going to see the formation I talked about last week. We had that wedge formation, didn't we? And I wasn't quite accurate in terms of when, but I was right in terms of what. So what we had obviously this sort of triangle formation or wedge, and then we broke down. We retested this 38.2, and then we broke to the downside. What I'm expecting is sort of a smaller retracement back onto that liquidity area and down to the downside. That's to make sure we get our entry right, because if we don't get what we're looking for, then we're not looking to enter, because it goes against what we're looking at. So now let's look at the 1 hour. On the 1 hour, we can just see obviously that breakout. We had that retest. It looked like it was faking back in, but it didn't, and it come back below that 1 hour 50 EMA. Of course, last week it was breaking in and out that 1 hour 50 EMA, and it was very, very sort of up and down, so it can be quite hard to trade. And therefore, if you don't want to trade it, just make sure to use it as a correlation, at least, because of course it does correlate with all the CAD pairs, and has a significant effect on them pairs, especially USD CAD, of course. So what I'm looking for is sort of just a retracement to the 1 hour 50 EMA within this liquidity zone, and then a break to the downside, and then potentially looking at sort of $16.16 level. So that's what I'm looking at in oil, expecting a sort of small retracement and then down to the downside. But of course, the important part is, in some of the CAD pairs we go through, you're going to wonder why it might have slightly different biases. Well, my short-term bias on this is long, in terms of the fact that we're looking at, say, a 200 pip, or maybe 100, yeah, say 100 pip or 150 pip to the upside slightly, and then down to the downside. So therefore, on the other pairs, I'm looking at, say, 100 pip move to the downside before moving to the upside. So therefore, some of the pairs I'm going to go through, of course, we might see a 200 pip to the downside, then we go to the upside, because that's the confluence and sort of the correlation between them, right? So now what we'll do is we're just going to move on to the watch list. So the first pair I'm going to look at is Australian dollar CAD, so a CAD-based pair, right? So on the monthly, what we've had is we've had after forming a new low, price has retraced massively, right? We've had a massive sort of spinning top caused. So the monthly to finish as a spinning top, or was it simply a retracement for a new extension? So basically, what I'm saying here is that although we have sort of come up to make this sort of small spinning top, I'm anticipating that what price is going to do is it's just making a retracement, right? Because obviously on the monthly, that's what it's going to show. But on, say, the weekly or the daily, we're just seeing that retracement. So let's now jump to the weekly. We can see, obviously, the new major low is here, and it's obviously equaling some lows here. But now let's jump onto the weekly. We can see here that price closed below the new low, which we saw. We reversed off of that sort of weekly 50 EMA the last few weeks, as I said. Obviously, price has retraced with a bullish engulfing now, but what I'm anticipating is that after forming these wicks, I'm expecting a push the upside to 61.8 rejection, which we've sort of had here potentially, and then a roll over to the downside within this liquidity zone. So just to go over that again, we've got another touch of the trend line potentially. We've got 61.8 and we've got the confluence of the liquidity area. So I think we need a roll over to the downside and then come back below that previous low and then potentially make a new low. So then let's jump onto the daily. It's going to be a little bit clearer here. So you can just see we've got sort of this channel. We've come back into this channel, but doesn't mean we're not going to come back out of it. We've got the daily 50 EMA here. We've got the 61.8. So if we just plot that back on, from swing high to swing low, we just change our fib to the 61.8. And then you'll see it here, and we've got a nice rejection of that, and it's in line with this liquidity here, and then of course we've got some liquidity on the lower time frame as we'll see. So daily 50 EMA 61.8 liquidity zone, go into the 4 hour, and then what we've got is a nice sort of bit of correction, made this trend line here. Then of course we've had sort of this move to the downside, made this new low, and then now what I'm anticipating is this 88% acting as our fib, acting as our retracement zone, within some liquidity, and then a push to the downside. So here we've got a nice sort of confluence of our higher time frames to our lower time frames that we're going to get a roll over to the downside. So potentially, like I said, with oil, we're going to see sort of 100 or 200 pip moves to the upside, retracement before we move to the downside. Same here, we can see, say, a 200 pip move to the downside. So of course, fitting with what we're saying here, we could equal the low or go lower. And of course, because it's 200 pips in oil, it could be, say, 300 or 400 pips on AUD CAD, right? And it could lag behind slightly. So move to the downside, and then potentially we could get to my 61.8, then move to the upside. So that's where that oil correlation comes in for any of those you might be a bit confused. But like I said, we've got break and retracement to the 88%. The new low obviously was formed, and then retracement to 88%, and now I feel like we're going to roll over to the downside. So that's AUD CAD. So now we're going to go to the next one, which is AUD JPY. So obviously we've got that Australian dollar correlation here, so we're expecting to see something similar, which we do. We see a wick to the downside, and I feel it's a retracement rather than a reversal. Obviously price broke below that liquidity zone in the previous weeks, and we managed to maintain that pressure while nearly retesting it. So on the weekly, we've got these corrective flags. We broke to the downside. We've got this big wick down here. We've made this new major low. But as I said in my video last week, we did break it, but it was unconvincing, right? Which means I was expecting some sort of retracement. That is what I said in that last video. If you don't believe me, or you want to verify it, go check the last video out. So last major low was then broken back above this week, and now we've got that sort of retracement area we was talking about. So now we're going to the data, and we can just see sort of that slow corrective movement here. After that big impulse, we have slow corrective movements, therefore we can expect the price can go to the downside. And we've got them spinning tops, right? We've got rejection to the upside, rejection to the downside, and rejection there. And the important part here is if you look where the body candlestick closes are, that tells us where the open close was. We're trading within a sort of 33 pip zone here in terms of how far price is actually gone up and down. So therefore that tells us that price has actually moved in sort of 3 days. So therefore we're expecting deceleration and move to the downside. So let's go into the 4 hour. So on the 4 hour, what we can see is we've got this sort of corrective trend line again. We've broke it. We've got a nice retracement to the 61.8 on the 71. Of course, nearly a shooting star on the 71. And then of course liquidity here as well. So similar setup to the other one. And of course what we find is in the 4 hour 50 MA, we normally find is that we sort of push up. We might get an impulse break through, but then we get a fib and then reverse outside. So I'd expect maybe a bearish engulfing to come in the next sort of day, maybe obviously on this 4 hour at least. And obviously break back below liquidity zone to the downside. So that's my thoughts on AUD JPY. I think we're going to get a move to the downside. and it looks quite a nice setup. And if it wasn't a Sunday evening, maybe I might still, but I'm be more likely to get into it if this was a normal day, right? Because of course Sunday evening anything could happen. Monday markets could go funny, and of course we could get gaps in the market as well tonight, so it might not even play out like this. So the next pair we're going to go through is CAD Swiss franc. So CAD Swiss franc, we've got obviously this all-time low here, which is really important because it's our key level. It's an all-time low. It's the lowest the price has ever been, right? So it's massive, massive support. So obviously what I said before was price obviously broke that trend line, come down, broke the liquidity zone. We've made this last major low on the weekly, and then of course we've now retraced that all-time low on the monthly. So now let's go on to the weekly. On the weekly, what we find is this double tweezer bottom formation, which we saw on some of the other pairs, and we will see on the other pairs. So now looking at this, what we see is with price pushing up, we've now got that roll over to the downside, or what it looks to be, and then of course we haven't actually broken anything below these wicks. So I feel like we haven't actually broken any significant areas now. So tweezer bottom formation, double tweezer bottom formation to an all-time low. Obviously not come back to that last major low. We have obviously got a bearish candle this week, but I feel like we will push the upside potentially. As we'll see when we move on to the daily, we've got this sort of wedge formation. So obviously that flag again, or bearish flag, which normally means we're going to move to the downside. So we might get some downside, and that's the important part here. These time frames have got to be in correlation, right? So let's now look at the possibility we're going to go to the downside. We've got a bearish flag. We call it bearish because although it's a bullish flag with price going upwards, it's correction. So we anticipate that we're going to continue with the trend that we come from, which in this case is bearish. So we've seen an evening star here, which of course we did on this time frame close above that all-time low. If you look closer, therefore maybe we have closed below that all-time low, right? So let's go on the 4 hour. On the 4 hour, we see that corrective trend line again. We can just see we've now broke below the 4 hour 50 MA. However, on the other side of things, to say in a bullish sense, you could say, well, this is a high. This could just be a fake out, and we could reverse from the 38.2, which is here, and we could see a move to the upside, right? However, price is below the 4 hour 50 MA, and price has broken out the flag. So therefore, we're just going to look for what price tells us and let price show its hand before we move, right? Now let's look at the 1 hour 50 MA. We can see prices below that with a bearish engulfing, so therefore we might be looking more for downside potential, but we did manage to stay above that 38.2. So we just got to look in the next coming days what price shows us. Now, next pair we're going to look at is CAD Yen, and this is where we see a similar thing to what we just seen previously. So the Feb close we saw was a shooting star rejection of the monthly 50 MA. We was at the top of the wedge, and now we've seen the opposite. Price is broken through the bottom of the wedge, but it's not currently. Price is currently breaking below it, right, and it's currently sustaining it. However, price couldn't sustain bearish momentum below the previous swing low, right? We'll see this big wick to the downside. So now let's jump on the weekly. Let's have a look at these key levels. So of course we've marked our key level up, last major low, and you can see we are still below it. You can see a perfect example of how just these weekly levels can be absolutely crucial to your trading. We had a perfect retest, right? On the weekly, we had sort of this weekly low. Price come up, retested it, and now it's downside. Because if you would have got in here, of course you wouldn't because there was a gap, but potentially if you would have, or this is another chart, you would have potentially made quite a nice amount of pips, at least 100 or more. So price obviously broke that, retested the previous low successfully. However, we have seen sort of a double tweezer bottom, and now we've seen a doji. So we could potentially see a roll to the downside, or we could see price come back up. Because we could say that this is still within sort of reversal area with 3 candlesticks. So now let's look at the daily. On the daily, we've got this corrective. We've got this break of this trend line to the downside, and then we could be looking at sort of an evening star here, which goes into one of our reversal areas, and then a push to the upside. And this is much clearer. So we can see here, after price broke below the descending trend line, price made a new high here, which is 0, and then price retraced to the 38.2 here, and then made a new extension. So therefore, we can shift our ABCD with our fibs, right? If you're not sure about that, I will be releasing a fib video soon, so you guys make sure to check that out. So here you can see we've got this 100% fib here, 0% fib here, so we've shifted it right from here to here and there to there, new high and new low. So therefore, shifting this ABCD, we can see the price has retraced to 71%, and what looked to sort of be a retest is now broke through that, and now we are breaking above that 4 hour 50 MA, so therefore I'm expecting that move to the upside. So our minus 61.8 being in line for 80%, which we know is our magnetic level for CAD JPY, right? Price tends to go to this level. So therefore I'm expecting this CAD JPY to push up to there. And as we said before, we're correction on CAD, say 200 pips to the correction on oil, so 200 pips potentially to go up. So therefore CAD is going to get stronger and 200 pips potentially upside. But what we've got here, 200 pip target would be our to minus 27, so it works out perfectly with this trade, and therefore our correlation works perfectly. So now what we do is we're going to go down to our Euro Australian dollar and just see here. The reason why I've marked out this previous high as the next high, because when we're looking down here, this was the next major high that striked out to me, showing liquidity here. So of course, looking at this, we can see price has now retraced below that current high, but we do have this trend line still. So we're just going to jump onto the weekly, and what we see is the price has been very bearish in the last week or two. And obviously we see that bearish momentum's continued this week as we had a bearish close. Price closing below the previous high and leaving this huge wick rejection to the upside, right? Could this be a retracement or could this be a reversal? Let's have a look at the daily. So on the daily, we can see this upward trend line, or ascending trend line, should I say. And after price formed a new high, I put a question mark here because, of course, looking at the high time frames, we might say it's not actually a new high, but within this sequence, it is, right? Because we've got low, high, 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 low, high, 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 low, high, high, and potentially a higher low being formed, right? So price has rejected this 61.8% twice, and has formed a non-textbook evening star. So we do have that sort of evening star look, and the bearish candle does close below the open of the bullish candle, so potentially could go to the downside, but we still have that rejection to 61.8. So on the 4-hour, what we're looking for is a clearer direction, right? So price is broke below that 4-hour 50 main out, it's bearish engulfing, and then we seen a Harami bar, an inside bar. So what this means is price has closed and opened within inside the previous bar, and then this could be a sign that we're going to move to the downside still because we haven't broken back above that candlestick, but it has rejected that 61.8. So therefore, what we need to see is if price breaks below the below the 61.8, we invalidate that fib, or are we going to reverse from here? And of course, the trend line is acting as support. So for me, we're just going to look and let price show its hand here, but we've got two really good opportunities whether we go long or short. Next one we're going to look at is EuroCAD. So looking at EuroCAD on the monthly, we can see that we have a very, very impulsive candle. And obviously what we spoke about in the last month close or a couple of videos ago, we saw the price close just below, just above that monthly 50 MA, right? So we've got a massive, sign we could go further to the upside. And that's what we did. We've got a massive bullish candle this week. And now you can see the liquidity zone that we're sitting in. So looking at this liquidity zone, the supply zone where we're looking for supply to increase and price to come to the downside, as more people are selling this and turning into, more people are, of course, selling this from this level, and the buyers now getting out of their buys because, of course, they're now seeing that we're going to switch over from a significant resistance level and liquidity area, therefore anticipating their buyers will now close and they'll now turn to sell, seeing that liquidity drop, right? So very bullish impulsive candles to the upside. We've got that rejection of the high, rejection of the liquidity zone, but we did break through that weekly 50 MA, right? So maybe we'll see a retracement and then potentially break out later on. Price couldn't maintain that. So what we're saying here is a reversal or a retracement. So now let's jump to the weekly. On the weekly, we're seeing that tweezer top formation. That's no surprise, right? Because we saw that on another one of the CAD pairs, the tweezer bottom formation. So it makes sense the opposite of that, right? So we closed obviously below the previous high. Showing that there is that sort of rejection there. The only thing I don't like is the fact we've got this double tweezer top and then price pushed above and made a bullish candle. However, we haven't closed above the wicks in any sense, so we're still bearish, right? Obviously, we've got this liquidity area here. So now let's go to the daily. We can just see, if we just change this wedge, obviously we have got a wedge on the 4 hours, but we're not very clean here. So we're just going to take it off of here, and we're just going to look at this daily. So we've got this daily trend line, and what we might have here is a head and shoulders. I say might because it's not clean for me, but I do quite like the look of it. So we've got left shoulder here, head, and then right shoulder. I've used the curves rather than the head and shoulders on TradingView, just because I think it's cleaner. So I'm thinking to go along with our tweezer top formation, and this is a reversal formation, right? We're going to go to the downside, so this fits perfectly with what I'm thinking. So going to the 4 hour, and you can see this wedge in action. So we've got the swing higher to swing low. So very, very, from the very high to the very low, because of course this is sort of what I'm looking at from this break, this trend line here is what I've got there. 61.8 rejection, and of course we are sort of sitting above that 4 hour 50 MA unconvincingly. And obviously the CAD strength we spoke about goes well with this because we're looking for Euro CAD to roll to the downside, and we're going to look at Euro weakness on some other pairs as well, such as we saw before on Euro Australian dollar. And then of course it correlates with the CAD JPY long I was talking about before, that I did have last week as well, but I'm looking for these to continue. So now we're going to move on to the Euro Pound, a trade that I normally never ever trade. But one of my mentoring sessions, someone said to me, I quite like this pattern. And because there's a number of conferences, I am going to look at it, and I have included it in my watch list because I do think it could be quite a nice move. And for once, it could show a nice move on euro pound. That's the important thing. There is going to be trades pairs you don't trade, but sometimes there is going to be a setup that you might like, so you might take it. So on the monthly, you can see we're just sitting in between these two levels, and we've had a massive wick rejection to the liquidity zone, just like we saw on some of the other euro pairs. So now let's jump to the weekly. On the weekly, we've seen this tweezer top formation in an area of liquidity, right? Price struggling to maintain that bullish potential. Price has filled the wick that it previously created, or nearly filled the wick that it previously created. However, we've got that tweezer top, right? So therefore, bearish thinking. So as we can see on Euro USD, we've got a similar situation. We've got this move to sort of, similar to the one of the other pairs we looked at. We've got this sort of this push to the downside. And we obviously want to see some sort of reversal sign. So potentially here, we're looking for, say, a morning star, or maybe a bullish engulfing to tell us that we're going to switch to the upside. However, if we don't, we're going to be bearish still, right? So let's jump on the daily. On the daily, you can see here, we're looking at a bearish sequence, right? Because we've got this bullish correction, or bullish sort of trend line on the daily, and then we've broken that. Now we've made this new low, so we're looking for a retracement. We've got the daily 50 MA sitting below, and of course now what we're looking for is on the 4 hour, we see that where the 38.2 is, this fits with where this analysis here is. So we've got this sort of trend line here, but liquidity here, and then of course we've got this sort of low formative of a doji, expecting that indecision to push us to a retracement. We've got the 4 hour 50 MA, we've got the 50 and the 38.2 fib, create a nice either side of liquidity. So I feel that would be quite a nice move to the downside, right? So that's what I'm thinking. I'm thinking nice corrections here and then moves to the downside. That's my thoughts. And of course we've got the minus 27% and the minus 61.8. The important part here is the minus 61.8 is on a trend line. So for me, it's quite nice because what that means is that the target fits with what I'm thinking, is that we're going to get a move to the downside, then reverse from this trend line and push to the upside, hence the trend line. So that's my thoughts on Euro Pound. The next pair we're going to look at is, of course, Euro Japanese Yen, another one of my favourite pairs. So when we go into the monthly, we see that the last major low has been met, and of course we've now pushed back to the upside and created this bullish candle. So potentially a nice hammer to finish the month if we get the right movement in the next sort of 2 days and 5 hours. To jump onto the weekly, we can see that if we just adjust this fib, we can see that of course we've got this sort of price showing here. So what we've got here is from swing high to swing low. We've got, if I just change this fib to the daily, what we've got here is we've got swing high to swing low, break of the trend line, we've got this movement to the upside, and we've seen that 71% rejection on top of the weekly 50 MA rejection. So price, of course, nearly equal to previous low, so therefore expecting a retracement in some sense, or reverse to the upside. However, I think here we're looking more at retracement and an extension below. So therefore, with these liquidity as well, I think we're going to get pushed to the downside. So let's go on to the daily. On the daily, we can see the same thing. Price is suggesting the same thing. So when we look on here, what we can see is the same. So we've got this 88% fib as we saw before, and then from this swing high this time because we're on daily time frame. So what we're looking for is sort of push downside, zero, new low formed, now the flat retracement. And then what we've got here, if I get rid of this as well, apologies for that. So 88% fib, we've got an evening start. And sometimes what happens when we get an evening start, it doesn't fulfill, right? Because we have something such as a daily 15 MA in the way. So what we're looking for is price to sort of come back up, and then potentially just roll over in the next coming days. It doesn't mean just because it didn't sustain now, it won't be happening within the next few days. However, when we look on the 4 hour, we do have a bullish sequence we can look at, and therefore it does go real nicely with the fact we couldn't push below this. However, I do prefer the bearish potential rather than bullish, but we do have to be open to both biases and not be stuck within one bias. So on the 4 hour, what we see is we've got this descending channel, quite a nice descending channel, very simple. We'll see between these two trend lines. And then what we've got is we've got this break of the trend line to the upside. So focusing on this price action here, we've made this new high, and applying our fib, we can see the 71% fits perfectly with these candlestick bodies bottoms, massive wick rejection, so we're not worried even though it equaled the previous low. Because the wick isn't important, it's the body. So then we've also on the 4 hour 50 MA, so it's quite nice. And of course, we actually have a morning star here, so the opposite of what we saw on the daily, where we had a potential evening star, and that's why we might have not fulfilled that evening star. So we do have this morning star here. What we're looking for is simply just to maybe move to the upside, maybe 121.148, or the minus 27, 121.780, or minus 61.8, 122.594. So that's my thoughts on Euro JPY. Now let's move to Euro US dollar. Of course, always going to look at this for the DXY. So I remember a couple of episodes ago, we was looking at this monthly wedge. We were saying we're at the bottom are we going to break through? And since then, of course, we saw that hammer candle, didn't we? So we didn't ever break through. And what we've seen this last few weeks is a massive move to the up and downside for creating these most recent lows and most recent highs. So of course, the monthly hammer we had here in Feb um, signified upside potential, which we did get, and then we pushed it back to the downside. So we haven't had a confirmation until the March close whether this is going to be a spinning top, or of course we've broken any levels. So let's go on to the weekly. On the weekly, you can just see, if I just remove this level, you can just see how we've got two potential reversal areas. And the reason why I have these two is the same as DXY, right? The DXY was showing a bullish extension and a bearish retracement. On the Euro US dollar, it makes perfect sense to see a bearish extension, a bullish retracement. So bearish and then bullish retracement. Currently on a weekly 50 MA, but I don't see us stopping here, right? We closed slightly above, and as we saw before, even a slight close above one of these weekly 50 MAs or monthly 50 MAs pushes us up. So we're looking at any area where we like to see slowdown in price, a deceleration, dojis, spin tops. We're going to see a reversal, right? Because we don't want to get in at the end of at the middle of an impulse, right? This might look like an end of an impulse, but it's not. There's no reason for it to be. So the two areas I've got is 71%, which got liquidity here, and in line with sort of this previous lower high, and then of course we've got this one here as well, which is another lower high where we saw an even star forms in the 88%. So they're the two major ones I'm looking at. So let's come to daily. On the daily, we can just see, so these are the previous ones we were speaking about. And obviously this just shows us that sort of slower sort of reversal from here. A nice curved reversal we would have got, and then potentially reverse back from here into the downside. So on the daily, same picture as the weekly. Going to the 4 hour, you can just see we are above the 4 hour 50 MA. But I'm not too worried about that because I think this is looking still corrective. Of course, we did break this trend line and come to the downside. But for me, I think we are still going to see this roll to the downside. And the 4 hour doesn't show it as such. But of course, we have that daily and the weekly, which of course overpowers Euro USD on the 4 hour. But we just need to sort of watch and look for where price is going to decelerate. And the 4 hour and the hourly is perfect to see us where that deceleration is going to come from, right? So next pair we're going to look at is pound US dollar. So the pound US dollar was at all-time lows, or was looking to create an all-time low. We've seen a massive retracement the last few weeks with a 1,000 pip move to the upside, creating this huge wick. So of course after that evening star that we looked at last month, we have seen exactly what we would have thought, move to the downside. But going to the weekly, we've seen a massive rejection of that sort of all-time low as such. Of course, if it doesn't break, then it's not necessarily an all-time low. But because of the reason, because of it's just the lowest price ever been, we can keep it there. So then obviously we've seen price push back up, and we're looking for that retracement, right? Like Euro USD, we're looking for some sort of reversal from this area for price hold either. And I think the pandemic's going to get worse in the UK. Obviously, the British pound is going to be affected by that. So I think we're going to see it get worse. So I don't really see too much reason for pound strength. And of course, if we want to really get sort of technical about it, lower the interest rate, means people are less likely to save, they want to invest or consume. However, people struggling at the moment with people losing jobs, the unemployment rates going up, or looking to go up. Of course, people can get lower income even if they are getting the 80%. They're getting a lower income, right? So lower disposable income after their bills, after their tax, everything, lower disposable income. So what happens is with lower income, they're going to be spending less, consuming less. So at a time where you're lowering interest rate, where you need to spend more, everyone's got less money, so they can't spend more. So it conflicts, right? Then also, if people are spending less, it means that, and obviously wages are going down, it means that it's a knock-on effect because it's just the same repeated and repeated. So what happens is inflation goes down. And if inflation goes down, then prices go down even further, and then real wages go down even further. And it means it's just a downward spiral. So I can't really see much reason for the pound to get stronger, if I'm honest. But hopefully we do see some reasons prove me wrong and the pound does get stronger, but I don't see that happening. So the daily shows that price is sort of sitting on that daily 50 MA. We do have the keep saying the minus 61.8, the 61.8 here within an area of liquidity. And obviously, if we do just look, I think we have the 88.8 potentially sitting quite nice in that next area of liquidity. Maybe not the 80, maybe the 78.6. Yeah, perfect, 78.6. So that's quite nice for me. I think either here or we might see a test of this trend line, come up to the trend line, and then come to the downside. But I definitely think there's downside potential for this pair. But of course, euro pound, I did say I think we were sort of going to get a correction and bearish. So obviously, if a stronger pound, if I'm looking at pound USD long, pound USD short, I should be looking at euro pound long. But I think euro and pound are both very weak, whereas pound dollar is very different. So I think in that sense, you can't always compare correlations like that. So that's why I'm looking at them two separate um, possibilities. And of course, just it doesn't mean that they're both gonna go that way. It's just what I'm looking at first and what one shows me first. Obviously, I wouldn't get into the other trade unless both had the right setups. So next we're gonna go. Next we're gonna go into the 4 hour and just see obviously that slowdown in price. We've seen obviously a break above, so maybe we'll see some moves out to the upside. But I do favour the downside potential, so I'm not really looking too much in this 4 hour, even if we have broke the 4 hour 50 MA, right? So now we're going to look at the USD CAD. So I think we've got 3 more pairs to go. So we've got USD CAD, which a lot of us got on into the community. I did close it before it hit my take profit due to the fact oil was very, very, very strange. So if we go into the weekly, we can just see obviously after that rejection, perfect rejection. You can see what nearly was a shooting star here, a big wick rejection. We've got the exact same close here, so perfect example of price repeats itself and the true nature of the market, which is a video I've recorded within the Smart Tip series on our way. So if you're part of the community, please check that out because USD CAD is a perfect example of price repeats itself over time and why we say look left. So on the weekly, we can just see this tweezer top rejection. And obviously we can see the price impulsively broke up to the outside. And with USD CAD, I find that it will be very, very corrective. Then we get these huge impulses that take out sort of weeks and months of price. So here we're just seeing that. So then there's not really much to see here. We're just still in that liquidity. So let's go on the daily. On the daily, we can see that we had, of course, sort of I think it was last week, we had that evening star formation. So of course, we was looking for that, and it has played out exactly how we would have thought. So we still have the trend line here. So I'm thinking, are we going to come down to the trend line and then potentially move up from there? Go on to the 4 hour. And I think I can't quite remember where my entry was, if I'm honest. But of course, what we had sort of, if we take a fib from here to here, then we had a 78.6 rejection. It was a perfect reversal to the downside. So I caught that trade nicely, and I think it would have hit my take profit if I didn't leave it. So unlucky there. But focusing on what price is doing now and not what it did before, we've seen another even star formation, right? Or sort of maybe not even star formation. Typically, we saw bearish engulf and then further downside potential off of breaking that 4 hour 50 MA. So now we've had that 38.2% retracement. I'm expecting further downside potential to the minus 27 and the minus 61.8, which will take us nicely to our 1.36577 level, or essentially that trend line. And obviously goes with that oil. In fact, if oil's going to increase, say 200 pips more, then this is going to go down to 300 pips more, as shown here, a 320 pip difference between that key level. Obviously 260 pips for that minus 61.8. So it makes sense with what we're saying, right? And then potentially we might continue with an upward phase in the future, right? So now we're going to just go on to the next pair, which is USD Swiss. So for me, this has been quite an interesting pair. We've got sort of a massive impulse to downside, and we have got a bearish close below sort of the trend line that's forming. Going to the weekly, we see that even further, a massive sort of impulse upside. Weekly 50 MA proving strong, got a bearish engulfing off of that weekly 50 MA. And then we've got sort of a number of areas of liquidity here. 1, 2, 3, very liquid pair, which is no surprise when the Swiss franc's dominated by gold, and gold is very liquid, as we know. So of course, this moves to the downside. So I'm thinking, are we going to see now a rollover to the downside? So let's go on the daily. When we look at the daily, we can just see we're talking about the DXY again, aren't we? Because obviously it's a dollar index, and of course Swiss francs is related to gold, but so is gold because it's XAUUSD. So thinking of this, if we're going to see a reversal to the upside on the DXY, then it makes sense to see a reversal like this on the US Swiss as well, on the US Swiss franc. So for me, I think what we'll see is come to one of these areas as we said, and then reverse the upside. So the exact same as the DXY, naturally with the US dollar and the DXY's correlation. Let's go on to the 4 hour, we just see the same thing. We can see obviously broke the 4 hour 50 MA, but as long as we don't break sort of the come any lower than sort of the lows of this sort of trend line that we had here, sort of around here, then I think we'll be fine. But potentially, if you want to try and take the short early, you could be able to. Obviously, we go from swing higher to sort of swing low. Then I think it's like the 23.6. You would have seen a nice sort of reversal to the downside off of that, like you see here. So I think obviously this lines up rightly with what we're saying, because the minus 27%, minus 61.8% are both above these key areas we said. Obviously these are the fibs, this is 61.8 and 78.6. And of course it makes sense that our target regions for the short would have been in the long regions, for the entry regions for the long. So I think that makes sense, and I hope that makes some sense there. So why I still think, yes, we'll continue with the short, and then we look for that long opportunity. The last pair we're going to look at is obviously the main one that I wanted to talk about was obviously the reason why I went from long to short. So you know why I took the long. We spoke about that. So now let's look at why I took the short. We'll stick on the 4 hour, and I'll go up to the higher time frames after. So looking at this, we've got sort of this obviously impulse that we had. I was really happy looking to get my take profit. Then we formed this flag, and the trouble with this flag was we was making higher highs and higher lows, but it was becoming squeezed, and price was becoming squeezed. So there's a lot of liquidity here. I was expecting that. And what happened was we got this high high here, and as you can see, we've got this horizontal ray marked out. We then formed this candlestick, and we never broke above that high, and then we formed a high low. So for me, I was expecting this this movement to downside. So what happened was price then bearishly broke the sort of wedge or channel we had here, and I was like, okay, not going to close yet because we've still got this sort of major trend on. The reason why I got into the trade. Then with this spinning top, I was like, maybe a morning star. And then we got a bearish engulfing, and then I entered. I think my initial entry was around 110.400, 110, yeah, something like that. I was off of this candlestick here when we retested the 110 level because obviously the 4 hour 50 MA I just anticipated it was going to break it with such an impulse. So of course now I'm expecting this roller to the downside, and I'm still in. I've got a few scanners, but I closed them all before the weekend and just kept my 2 original entries, which is there, and I think 109. So I think it was off this bearish engulfing, or maybe, and then I got entries off of this evening star as well. So I could have kept them. I could, if we see a retracement, I could even get in again. But see how the gap, if there's gaps in this market open, is what we expect. So now we just can go on to the mark, just to see how does the higher time frames work. Well, higher time frames do agree with the short, right? Because we have a monthly trend line here. We have obviously these highs that we didn't reach, and we're looking to break below. And we've also stayed below that 108 level that we spoke about. So that's really important. We stayed below that. So of course now we're looking to roll over to the downside. This fits perfectly that short idea. So in the weekly, you can see broke back into sequence, broke back below the weekly 50 MA. So perfect. Still what we're saying. And then daily, obviously that was the trade that I took. But you can see here, if you think about it, well, look at the original channel. The original channel here was obviously swing high, swing low that was broken. So that swing high, swing low. We've actually got 88% here. So maybe this was just a retracement the whole time, and that's what I got the 500 pips from, right? Just on the daily time frame. So then 88%, you can see we've got that sort of even star in. Maybe it's not an even star typically, but I still feel like it is because of it's the same process that you've squeezed it out or pulled it out a little bit, and you've got loads of dojis, bullish engulfing, dojis, and then bearish engulfing. So then move to the downside, broke below daily 50 MA. So I think this would be a really nice short. If you can get, obviously, if you can get scaling, I'd look for. I think on the 15-minute there was a nice. Maybe in the hour there was a trend line you could draw. So I think it's from here to sort of here, and you can just see, you can just play off them fibs. What you do is you just play simply a fib from sort of here to the low, look for a retracement, and then go down. So that's my weekly watch list for this week. So USD short, as I said. So that's my watch list for this week. I hope everyone's enjoyed this video. I know it's been a little bit longer than usual, but there was a lot to talk about this week, and I obviously wanted to just start the introduction by talking about what is going on around us. And there was a few bits of fundamentals in there, multiple time frame analysis, fibs, and this is all the stuff I teach. And I'm going to be releasing a video in the week about my journey so far and why I have made the step to go into sort of private mentoring, alongside what I'm doing via WEF community, just for them guys who feel like they need more one-to-ones. So if anyone is interested, please drop me a message on Instagram, Rudgeyfx. If you're within our Slack community, drop me a message in Slack. Or obviously drop me a number on my WhatsApp if you've got that, or obviously go on my Facebook page, which is Rudgeyfx as well, which my WhatsApp's on there. And of course we can discuss the sort of week, the one-to-one mentoring, and then I do sort of some extra stuff like my trade setups, some ideas that obviously go into Slack.